Did you know that nearly 40% of taxpayers end up overpaying or underpaying on their taxes every year because of common mistakes? So, I was once working with one of my clients, and they was shocked when I told them that they owed a few $1,000s to the IRS. And what they didn't realize was that her W-4 was actually set up incorrectly, and she didn't have any deductions, she didn't have any credits. She was bamboozled, flabbergasted, because she had to pay so much money back because of a simple mistake, right? And so Proverbs 4 and 7, it says, the beginning of wealth is this: get wisdom, though it costs all you have, though it costs all you have, get understanding. So wisdom in your finances actually starts with understanding on how to avoid costly mistakes like this. So today, let me help you identify why you might be paying more than what you actually should. And so here are 5 common reasons why people pay more in taxes, and how can we help you avoid them. So number one, incorrect W-4 withholdings. So having an incorrect W-4 withholdings, this means that you either are paying more in taxes or you're paying too less in taxes. And most employees don't even revisit their W-4s after they actually start the job. Like some employees, they may go in and edit their W-4 if they want to go exempt, so that way they can have no taxes taken out. But here's the thing, that affects you if you don't go back and look at it. So if you had some life changes and you didn't go back and look at your W-4 to adjust it accordingly, you could be overpaying or underpaying, right? And so the solution is, make sure that you adjust your W-4, review your W-4 to reflect your current situation, especially after like life changes such as like a marriage or having kids or starting a business, because this could literally make the difference on whether you have to pay back more taxes or pay less taxes. So, like, say for instance, with marriage, when you get married and you file jointly, the standard deduction for you goes up. So, depending upon how much you and your spouse actually makes, you could be saving more money by actually getting married, right? So, let's just say, for instance, the income range, the highest range is 96,000, but you and your spouse together only make 75,000. As a single, if you made 75,000 as single, you're probably in, let's just say, the 22% tax bracket. But when you get married, now you went back down to 12. So you want to make sure that you adjust your W-4 to actually reflect stuff like that, especially with having kids or even starting a business. If you start a business and you know that you're going to owe, you may want your job to take out more taxes. So that way you can counteract the taxes that you may owe. You pay more taxes at your job, so you won't have to pay more taxes on your actual business. So number two, failing to use tax advantage accounts. So what are tax advantage accounts? These are accounts like IRAs, 401ks, HSAs. All of these accounts, they reduce your taxable liability or your taxable income and actually help you save more money in the future. So, for example, if you contributed $6,500 to a traditional IRA, you can actually lower your taxable income by that same amount. So that means if you made $50,000 in a year, but you contributed $6,500 to your taxable to your IRA, now your actual taxable income, meaning the income that you're taxed on, is $50,000 minus that $6,500, right? So these accounts help you right now because you're deferring the money for later, right? And so Use these accounts to actually help you save money. Like I have a 401k, I have an IRA. These things help me save more money right now. So that way later on the money that I get after I retire, hey, I can use this money and I won't have to pay that much taxes on it, right? Or whatever the tax rate is at that point in time. And so number 3, missing deductions and credits. So a lot of entrepreneurs or even people with complex returns, they always miss deductions and credits. They either go to TurboTax and not know about some of the deductions and credits that they even qualify for. So deductions reduce your taxable income. Credits reduce your actual taxes owed dollar for dollar. So deductions, so for example, the child tax credit, earned income tax credit, or the lifetime learning credit, those are different credits and well, those are different credits. So let's just say if you owed $5,000 and within these 3 different credits, you have $5,000. Now you have reduced your taxable liability, the money that you owe towards taxes, by $5,000, which means you owe how much? 0. But deductions, it reduces your taxable income, which means, hey, if I made $50,000, but I have $10,000 in deductions, that means I only made $40,000 in the year. And I still have to pay taxes depending upon my situation, right? So, number 4, lack of tax planning for businesses. I stress this with all of my business owners. Make sure that you plan your taxes. Like I offer tax planning and I tell them, let's plan now so that way you won't have to be looking crazy at the end of the year. And so business owners who don't track their expenses or fail to actually claim deductions like the home office deduction or the vehicle mileage or equipment costs, they often overpay. They often overpay in taxes because they don't take these expenses or track them. What you don't track cannot be written off. And so what's the solution to this? Using an accounting software like QuickBooks or using a professional like myself to actually help you track all of these deductible expenses, right? If you know what expenses to track and you track them wisely or correctly, you won't have to pay more money when it comes tax time. And number 5, waiting until tax season to prepare. Oh my God. If you wait till the last minute, what do you think the outcome is going to be? Right? Many people think it's only about taxes in April, but but when you miss out on planning for the opportunities during the year, you're going to be surprised at the end of the year, right? So when it comes to tax season, you shouldn't prepare in December. You should be planning throughout the entire year. So that way you would know how to move and adjust accordingly. So if you get paid more, let's make sure that we account for the increased income so that way you won't be having to pay more at the end of the year because of that increase in your income. So the solution is make sure you plan throughout the year by reviewing your finances quarterly, right? So as business owners should, if you feel like you're going to owe more than $1,000, pay quarterly taxes, right? If you feel like you're going to owe more than $1,000, pay quarterly taxes. So you could break that amount up into 4 different sections, especially based off the IRS. Because as a business owner, when you actually get to that type of tax, you supposed to do quarterly taxes. I don't want to get hit with penalties. I don't want to have to pay more taxes than I need. Paying more in taxes isn't just a mistake. It's money that you work for that you didn't need to give away. So Proverbs 21 and 20 says, the wise store up choice choice food and olive oil, but fools go up theirs down. I'll say that part again. The wise store of choice food and olive oil, but fools go down all of theirs. Wise planning allows you to keep more of what you've actually earned instead of giving it to Uncle Sam. Nobody wants to pay more in taxes. I can guarantee that part. So how can we save and be better? One, make sure that you actually track and adjust your withholdings. So go back and look at your W-4. Make sure that you're reviewing your W-4 to make sure that, hey, am I taking out enough or am I taking out too little? Adjust it. Make sure that you look at it quarterly so that way you can make those adjustments throughout the year. So that way we can counteract those that tax, right? So use the IRS withholding calculator to make sure that you're not over or under withholding. You can actually access this on my website, thekingdomdynasty.com, or you can go directly to the IRS website. Number two, contribute to tax advantaged accounts. So this goes back to maxing out your IRA, your 401k, or your HSA every year. So that way you can lower your taxable income. So if the total amount between the three accounts is $23,000 and I make $100,000, I didn't make $100,000. I made 100,000 minus the 23,000. Right? We want to make sure that we save and invest our money. Number three, plan for deductions. Make sure that you save your receipts, log all your expenses, all related to childcare, your education, your medical needs, your student loan payments, um, all of these payments. Make sure that you keep all the receipts for them. Remember, what's not tracked can't be deducted. Number four, hire a tax professional. Right? That's what a lot of my clients actually did. They hired me to help identify the strategies that they actually missed so that way we can work through getting them more or implement more tax saving plans for them so that way they won't have to owe at the end of the year. And then number five, review your taxes quarterly. Don't wait till April. Don't wait till April to assess your tax situation. Make sure that you actually check in regularly so that way you can actually make adjustments that's actually needed. So don't wait until tax season to find out that you overpaid, or wait until tax season to find out that you underpaid. Visit my website, thekingdomdynasty.com, so that way you can actually start your tax preparation journey and learn how to maximize your refund while saving for the future. While I'm doing your taxes, guess what? I'm going to help you. I'm going to teach you so that way you can understand more about your taxes so that way we can grow together. And so God is calling us to be wise stewards of all of the blessings that he's already entrusted to us. So with preparation, with diligence, and trusting his guidance, we can avoid costly mistakes easily and position ourselves for financial abundance. I know everybody want abundance, everybody want generational wealth. I want kingdom wealth, right? So together, let's make sure that this year is the year that you stop overpaying and start saving more on what you earned. So if you found any of this information helpful, beneficial, make sure you like, comment, subscribe. Let me know in the comments what you actually got from it. Did you learn something? Do you need to adjust your W-4? Do you want do you need some help? All right. So until the next video, I'll see you guys in the next one. Be blessed by the best.